Hey guys, Mike here. So boy, we got another big week ahead with a boatload of earnings, and also not so much the economic data, but the fact that the Fed is rolling out everybody and their grandmother as a speaker this week, even Jerome Powell. So we're going to get to see, and I'll show you how many speakers it is, because it's a lot. And so again, this might have been planned well ahead of time, but we'll see what they have to say and stuff, and see if they're trying to rein in what's happening. But speaking of that, one of the members sent us a article from Forbes, and it kind of explains and put the spotlight on what's going on, and ties into what I've been talking about with financial conditions and liquidity and things like that, because that's what drives markets. No matter what you're talking about, it's not fundamentals. It's, in a way, the best I heard it talk about was what drives stock prices: sentiment and liquidity, right? Or i.e. financial conditions, whether they're tightening or loosening, right? And so we're going to touch base on that and a few other things that is starting to happen, which I've been talking about. I think you're finally starting to see them. You may be seeing it personally. We'll have to see on that. And then we're going to go over the charts of what to expect this week as far as moves and stuff. And so, going over real quick, this Forbes magazine, the title kind of tells you what it's all about, right? Why are stocks on a roll? It's the liquidity, stupid. And certain things in here to pay the most attention to, I'm going to highlight. And one is right here: the stability of the international government bond market matters more to central bankers than stemming inflation, according to an expert in global money flows. And if you look, global liquidity, we all know that's the most important thing. A measure of how much money is sloshing around in the financial system, which we have a boatload of. That's what drove up inflation, or one of the reasons. Has been on an upswing since October, according to the research from the Cross Borders Capital, a London-based firm that specializes in monitoring global capital flows. And if you look at this chart here real quick, I'm going to zoom in, and you say, well, I don't see anything going up. Well, let's zoom in here real quick. Right there, that little bitty tick, you see it? That don't seem like much, but that's a lot of money, actually. And this, to me, sums up this whole article. I think the most important factor above anything else is the integrity of the sovereign debt market. We talked about this before. That's what this is all about, really. If you get a blast like you got in Britain and the U.S., we touched on that a long time ago, last year in 2022 when it happened, so their bond market. In the U.S., we've got a real problem, basically, right? So if that happened in the U.S., the world financial markets would have crashed. You might say very loosely that we're moving towards a world of yield curve control. Inflation is an issue, but it plays second fiddle to the workings of the sovereign debt market. And that is the absolute truth. Like, Britain can have their issues, but if we had that same issue here, the whole world is going to feel the same way. When China had their issues, the whole world felt it, right? And so that's something, yes, the Fed pays attention to it. Everybody pays attention to that. So they're like, inflation, yeah, it's coming down. It's heading in the right direction. But which one's more important, keeping the debt and credit markets functioning or inflation? Because you know what they can say about inflation? People are making more money. So yeah, that's not quite as important, right? And also, look, I've told you before, certain income brackets are really feeling the pain. The Fed don't care about that. The government don't care about that, okay? What they care about is the big boys, keeping these companies open and running, because they're the ones hiring to keep us working so we can find 3 to 5 jobs to help support our families, that kind of stuff, right? So you got to kind of think about it in that instance. And maybe that's why, I think, again, Fed Powell kind of proved it when they rigged that first question about the financial conditions, and he literally read it off the paper, right? And you can tell he didn't care, right? He seemed like a dad on a 700-mile road trip where their kids are saying, are we there yet? Are we there yet? Are we there yet? I've been on one of those. Have you been on one of those? And you get pretty annoyed by it, right? So we're like, yes, we're almost there. Yes, no, yes, right? And that's kind of like he's been asked a million times, like, what are we going to keep doing? Keep raising rates? What are we going to do with inflation? And so, that's why I said he looks like that, right? But I think, and that definitely sums it up. Understand what moves stock prices more than anything else, and that's why it's hard to spot any bottom, whether this is it or any bottom in the past, because not on some technical indicator. It is literally, because it's hard to measure sometimes or spot it right out of the gates, the sentiment that people have, which means they're willing to come back in the market versus sell it off. And then when those financial conditions really start to loosen, right, and start going this curve up, right? And so I did a members video on that, showing them in detail, going all the way back to 2001 forward. You can see it when you see that move up, right, in financial conditions, loosening or tightening. The market moves with it fast. That's just the way it is. And so it doesn't matter fundamentals, growth, earnings, whatever. And plus, like I told you, the stock buybacks are just insane right now, right? They've been insane since for years now, but they're really, you think they can't get any higher, they keep getting more and more. And then, of course, what else is happening? Short covering. I read something yesterday, that Thursday was like last week, was the biggest short covering day in history. More shorts were covered than ever on Thursday. And so that's another thing that's happened. Then you got the ODTE options, which are helping drive this market, which we've never seen before. So this is, again, it seems like as the market evolves, we keep getting these new things we're trying to figure out, with these same day options expirations or options expire within 24 hours. And then the amount of share buybacks is just becoming unbelievable. And it's like fundamentals are just still on the back burner. They've been on the back burner for years, right? And so that's some things we're trying to figure out, and we'll continue to figure them out, right? But that leads me into this right here. And again, what's happening to the consumer? I just talked about them. Well, the share of household income going forward toward consumer debt is at pre-pandemic levels. Now it's back up 5.76%, and that does not include mortgages, okay? Or student loan debt for that matter, because nobody's making student loan payments right now. And so that's something to keep in consideration. And that leads us into, of course, what else does that lead to? And of course, what else does that lead to? Total credit card debt reached a record high of $930.6 billion in the fourth quarter of 2022, according to TransUnion. And of course, as that's happening, what else are you seeing? Delinquencies rise. But it doesn't matter whether it's delinquency on cars or credit cards or consumer debt, percentage of income. It doesn't matter, because finally, this is what I've been talking about for a while here, as inflation starts to come down and erode, what is finally happening? You're starting to see wages finally begin to outpace inflation, so people are starting to be able to take more money home. And that's all that matters. The number of jobs you can go out and get now, the wages finally, because inflation is coming down, even though I know in a lot of stuff it don't feel like it, right? I mean, seriously, I see housing prices coming down, car prices coming down, groceries still up there. And that's a big one for consumers. Energy I hadn't tracked in a while. And like I said, I saw a chart the other day I didn't even show you guys because it was useless. It was car delinquencies, right? And it was like delinquency in these payments. But then when you look at the chart, it didn't matter, because in like 2014 and 2018, it was going up and it was the same level it is now. And guess what the stock market did? Kept going up, right? It didn't matter. And there's certain things just on my credit cards and like cars. Why? Because you can get rid of them. You can go file bankruptcy, whatever. But it's not where you live. Most people don't live in their cars, and most people don't live on live in their credit cards, right? As long as they're keeping a roof over their head one way or the other, and the eviction rates aren't going through the roof, and the mortgages aren't becoming delinquent, right? That's the two big things I would be looking at for sure. Student loan debt's another one, because you can't discharge in bankruptcy. And last time I looked, if I believe it's a federal loan, they're going to come get your money out your paycheck, right? That's what's going to happen. And so when we start seeing people lose their homes, whether it be through renting or mortgages, and if student loans ever become a payment again, and they start garnishing people's wages more, then maybe that's a whole different story. But right now, sentiment, liquidity, financial conditions loosening, stock buybacks, right? That's what's driving the market up. And of course, this thing about it's going to be a Fed rate pause, and soon they're going to cut rates and all this stuff, right? Even though Friday, what'd you see? The yield started going back up. So I said, well, wait a minute. Now I think they're going to do another rate hike here, and then maybe another one after that too. And maybe they're not going to cut rates, right? Which I assume that's what we're going to hear this week a lot. But we'll have to find out on that one. Again, going into the charts though, we have moved up a lot, no doubt. And here's the SPY, and something I didn't point out Friday, which let me point out now. You got your golden cross on your S&P, and every other bear market, you only get one golden cross. That's where the 50 goes over the 200, and you can see the RSI get overbought. And of course, what happened? It pulled back. That is actually a healthy thing. I expect to at least come back down to this trend line and see if we get a bounce from there, whether it's off the one from the double top or the ascending trend line up, which is what we're at now. Is again, we are definitely in an upward trend, bullish trend, whatever you like to call it. And then looking on the Qs, what do you see? Blew right through that gap, and now we're coming back down. What I expect is at least close this gap. Won't surprise me Monday or Tuesday if we close the gap and maybe get a bounce. Or as you can see, this volume gap here, you see how it flew through the volume gap going up? Well, it can easily come back down through the volume gap. And you can see it, hit back down there in that area as well. But again, a healthy pullback is good for the market, right? And so looking at this right here, this is Tesla. This is what all that matters for Tesla this week, is this area right here. And you can see this is what we're looking for. This is the weekly. We're looking for that support resistance flip, right? And then if we keep moving up, because when it comes to the options I showed you last week, you can get all the way to like 220 or something. And so, we'll see if we can continue moving that. And then on the RSI, you see on the weekly, not even over the 50 mark yet. So not even close to being overbought or anything like that, right? But again, this shows what I've been talking about. The NASDAQ 100 is set for a breather as technicals stretched, right? And so you can see this marks out the RSI, and then when you've seen the pullbacks, And so here's the RSI where you see us at now. And so people are expecting some sort of, pullback, sell off, whatever you want to call it, profit taking. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And of course, at some point in time, the bears are gonna stop covering shorts, right? Shorts are gonna be covered, and then we're either gonna start moving up on their own, or you're gonna see it stall out and start consolidating, right? Which is healthy for a market. And so, are there still people still shorting? Yeah, there's a lot of hedging going on, no doubt about that, probably. But I think some people are capitulating the other way now and saying, okay, the breadths are strong, the percentage of stocks, which I put in the members news briefing every day, are really high now, above the 200-day moving average on the NASDAQ 100 and the S&P. And so that's something to keep in mind, of course. Then as you move up, what happens? You start having these support levels put in place, whether it be through consolidation or, again, pay attention to the dart pools, right? They're the ones that set these. And so, as we're going up, I showed you that. All these levels being set by the billions of dollars in orders going in, and they can set as magnets, support and resistance levels, and so that's something else to keep in mind. Now, of course, what do we got this week? We had the biggest earnings of all last week. Didn't really affect the market, let's be real. I mean, the earnings weren't good and didn't matter. Like Apple still is the mega daddy of them all, and it just went, we're going green. Even if everything else is blood red, it stayed green. And again, you cannot have a major sell-off in a market if Apple is not going to sit there and go down. That's just the way it is, guys. I'm sorry. That's the one stock you got to watch. Ain't no way a stock that makes up 20% of some ETFs and 7% of the S&P, and I think it's double digits for the Qs. How can that happen? That don't make no sense. It's not going to happen, okay? I am curious to watch energy stocks, by the way, this week. You see a lot of profit taken on that one, and people are rotating into other areas. I want to see if that holds or doesn't hold. But here is a lot of earnings to pay attention to. On Monday morning, I don't see anything that's going to change anything. In the afternoon, pay attention to Pinterest, because like I've been putting in the Discord, this one right here is definitely going into stage 2. It's been stage 1 forever. Activision Blizzard, they finally going to complete the merger or the buyout with Microsoft. I want to see how people are traveling. This is a big one to pay attention to. There's a few this week. Royal Caribbean, BP will just brag about how much money they're making. Enphase is the big one because it swings huge either way, and it's been selling off, made a comeback Friday. We'll have to see. Chipotle is a big one because I want to see if their CEO brags about pricing certain people in certain income brackets out again and having the middle class make up for them. I want to see that as well because they kept raising prices. Uber, of course. We're going to get to see CVS Health, Wendy's. Are we still buying? Because they're still charging a bunch for their combos right now. They didn't come down like McDonald's. Dominion Energy is going to be another energy firm to listen to. Walt Disney's been on a tear for crying out loud. I definitely want to see how the tickets are going and everything else. We're still buying like crazy. Affirm, I think, is one of those, so I think it's buy now, pay later. Correct me if I'm wrong on that one. I hadn't studied that one. But I want to see what they got to say. Robinhood's been god-awful because I even read a report this weekend saying they got the least amount of users ever since their IPO. It's been going down like crazy because they got a lot of competition now, right? And then PepsiCo, of course, is a big one for those who own it. Hilton's another travel one. I want to see what's going on. We booking hotels. Usually they've been bragging about that lately. Duke Energy, Toyota. Are we buying cars? Is this going to be a GM report where it was great, or a Ford report, which it was a turd and they sold off like crazy? PayPal, big money loves that one. At least they did a few months ago. Lyft's going to be the same as Uber. Expedia, they're the ones booking the travel, so I want to hear about that. And then Honda, of course, I don't really know much about the company because I don't research it, but we'll get to see if they're selling cars and we're still buying them like crazy. And then when it comes to economic data, not really much on economic data, especially Monday. I don't see anything worth anything. If you like to hear the president speak, good luck with that. But then you got, the Fed Chair Powell speaks on Tuesday. FOMC member Barr speaks. You do have consumer credit, so let's pay attention to that one. And look at this, FOMC, and another FOMC. So 3 FOMC members on Wednesday. You will have wholesale inventories, which we've had a problem with. Crude oil inventories obviously will affect the price of oil. We'll see on that one. Unemployment claims, again, we got this super tight labor market. That's not really doing anything right now to the market anyway. Natural gas, I'm going to talk about in just a second. That should affect the price a little bit. Then you can have a consumer sentiment, inflation, expectations. Look at this, 2 more FOMC members. How about that? And we'll get to see, is the Fed going to come out and kind of say, let's try to push this market back down, or are they going to not care anymore and then just say nothing, and the bulls say, hey, hey, hey. But when it comes to natural gas, because a lot of members talk about this, they call it the widowmaker for a reason. So I put in here, will the 9th week finally be the week that turns green? Because right now, this is a weekly chart. You have 8 weeks in a row. And this goes all the way back to 2020. You can see you didn't see that happening. And now it's sitting at this critical level. Right there it was in 2020. And people are like, man, is this going to bounce or not? Because there's been a ton of selling volume. It is way oversold right now. And it looks like when you look at that chart, a capitulation moment, right? Where it's just nothing but this red bloodbath going down. Same when you saw in crypto when you looked at it, it was going down after FTX. And so will you finally get a bounce? And I think that those natural gas inventories are going to have something to do with that. But people, I almost guarantee a lot of people are just buying in because they're like, hey, it's a good risk reward maybe, right? But if it doesn't hold there and it goes down, it's not good, right? Going to the next level. But I know a lot of people loading up on this one. Again, it's called the Widowmaker for a reason, because you see moves like that. And so, jokingly, if you're going to get into it, just don't be married. That way there's nobody to leave as a widow, okay? Ha, ha, ha. But, again, 8 weeks in a row. I haven't looked at the weekly chart going way back. Going back to 2020, there was no 8 weeks in a row. And so we'll have to see. But let me know in the comments if you playing around with that one and stuff. And I know a lot of people, they're just buying like a single or 2 options or something going out to June because they're not super expensive, and because it makes these huge moves up and down. And so you get one of those big moves up, all of a sudden you're, I don't know, paying the rent for the month just off those couple options or something. So anyway, let me know what you're doing in the comments. So there we go. Big week ahead. We're going to see what happens. I definitely don't expect some huge rocket ship up, I would think, because we've moved up so much. I'm looking for a healthy pullback. I know a lot of people are in certain stocks. All got our alerts set. And then if that happens, start putting some positions in or whatever, or shorten it, whatever you want to do. So anyway, hope you guys have a good one. Hit the like, subscribe button if you got anything out of it. And I'll see you tomorrow.